Well, let's welcome the first management on the show, Galaxy Surfactants. That's in focus on the back of their Q3 numbers. To discuss the past quarter, what's the way ahead, we're joined by Mr. Natarajan, the Managing Director and CEO at Galaxy Surfactants. Good morning, Mr. Natarajan. Always good to speak to you. Hope you're doing well this morning. Well, the past quarter's numbers we have, a bit of a soft quarter with regard to margins. But let's look ahead. What's the guidance for FY27? Considering there could be some respite in the industry, India and US have got into that trade deal. So give me two numbers. Volume growth that you'll end this year with, and on that base, what kind of growth will you be looking at? And the EBITDA per ton as well. What could be the broad range? Please go ahead.
So this year, I think we have met multiple headwinds and we have managed to put a good set of numbers. The flat 9 months volume growth rate, and also but then yes, we've been able to show growth in a EBITDA per metric ton. 20,000 and this quarter. Now, for 27, I would probably look at ending the year with a slight volume plus. Okay, it all depends on how things goes in this quarter. And EBITDA per metric ton, I'll stick to my range of 19,000 to 21,000. We would have done a good job if we are closer to the higher end. But yes, we need to see as to how the balance portion of this quarter goes.
Just to confirm, sir, volume growth for this year will be, and next year? I didn't get that number.
Volume here for this year, I said, will end flat. Okay. For next year, I would like to wait probably till May when the India numbers pick up, because it's expected as the commentary of all our customers in India that they are seeing some green shoots because of the GST rationalization. But we need to wait at least till May to be able to have a clear picture on what the volume growth will be for FY26-27.
Okay. Sorry, sir, we still couldn't quite catch the volume growth guidance for FY26. What is it going to be?
I said, see, our 9 months has been flat.
Okay.
And then I said we would be pretty happy if we are able to report overall slight volume plus growth for the 12 months. But yes, we're keeping our fingers crossed.
Okay. So volume growth flat, maybe just a minor single-digit kind of a growth for the full year. But in that, your specialty care volumes have done particularly well. That's seen a growth of 35%. Was that a one-off, or can specialty, care volumes continue to see this kind of growth rates?
No, it is a combination of certain projects in pipeline that matured and we were able to start the business in Q3. But also, as our response to the US tariffs, we had initiated certain aggressive market placement of volume. So that also aided. So I would expect it to be a good growth, but it's not that we'll keep continuing to do 35% growth. But what is important is that with the US tariffs getting taken care of, we do see all our projects in pipeline that got suspended in our North America market getting revived. And that would help us getting into the next financial year.
Mr. Natarajan, morning. Just one quick point. This is the specialty stuff you sell into Europe mostly, right?
No, it's rest of the world. Europe and North America and Latin America are the big markets.
I see. So it's kind of evenly spread out. It's not just, it's not skewed.
It's not just, no, not exactly, because Europe, we have been having challenges since the time, it has been battling its own problems. Right. So we do have a lot of projects that are in the pipeline, but some of them are not getting progress the way we want it to be because of the challenges that some of our customers there in Europe are having. So we need to pivot across. We need to pivot across North America, Latin America, and Europe. North America, we had a headwind in terms of the tariff. That having gotten taken care, we do hope things will look better in the coming quarters.
For the US, that for the specialty chemicals you produce, the tariffs are dropping, are going down, because you'll have to go line item. When the agreement comes out, right? But you think for you, tariffs are going down?
No. First of all, there are two things. It has been announced that the 50 goes to 18. The 50 has suddenly gone back to 25. Because the Russia crude penalty has been removed. Okay, so 50 comes to 25. The question that we need to wait for when the details emerge is whether the 25 remains 25, 25 comes to 18. But that's too early to say. But 50 to 25 itself is a significant relief.
I see.
So how big is the US market for you as a percentage of your revenues right now?
So there are two aspects. One is US market. We look at what our subsidiary Trike does there, okay, which is a huge business within US. So that obviously is not as much impacted by the tariffs. But then what we do from India and Egypt put together, we're talking about 10 to 12%. Okay, and we do see there's some products that really got impacted in a very huge manner, which we do from India. That would start getting better due to the tariff getting reduced.
Okay. So your volumes in AMET, that's Africa, Middle East and Turkey, saw a double-digit decline. A, what led to that? And two, has it bottomed out? Can we expect some improvement?
I'd say that the struggle in AMET continues because two of our biggest markets, Egypt and Turkey, are battling significant currency depreciation as a fallout of the huge inflation that they have. Now, that has impacted consumption and also the significant amount of competitive intensity with certain players in the end market who also are backward integrated. Now, I'd say that this seems to have bottomed out. Okay, we do see certain better numbers emerging, but we'll have to probably wait for 2 more quarters to see how it sustains.
Okay, just one more question. I think you spoke about in one of your major tier 1 client, there was a volume loss due to some change in formulation. Has that been resolved, or have you received commitment from the large client, or will it continue to drag?
No, the reformulation obviously has happened in terms of the way that the oleochemical prices and the crude petroleum derivative prices have significantly expanded in terms of the pricing. So that is something that continues to be a challenge because fatty alcohol prices don't seem to be relenting. It continues to be at a high level. So we do see in this, the customer does tell us that they're looking at if it softens, we'll see probably whether there is some reformulation happening to our advantage. But as of now, we're preparing to see how we are able to participate in the reformulation by coming up with our own line for the alternate surfactant.
No, absolutely. Thank you very much. Good luck as you sort of execute.
Thank you.
I appreciate it.